You're much more likely to get divorced. You're much more likely to have a stroke. You're much more likely to be the victim or the perpetrator of domestic violence when you don't have money. America becomes more like itself every day. And that is, it's a loving, generous place for people with money. It's a rapacious, violent place for people who don't have money.
Scott Galloway has a reputation for delivering brutal truths. But one of the most powerful strategies he ever shared was how he reverse-engineered a $160 million exit before he even started the company. This isn't about passion or luck. This is about a cold, hard, calculated framework for building a business the market is guaranteed to value. Let's start with that story because it's the masterclass in building to sell.
You said, I worked my ass off. I was there at the office at 2 a.m. You said, but I don't regret it. You said it was totally worth it. And when you were starting L2, I don't really know too much about that industry or that business other than a handful of articles. Were you that calculating with working backwards from an exit? And by the way, the story ends with you selling it for $120 million.
160, boss. Jesus, get your facts straight. And by the way, I'm number one on Amazon today. I don't know if I told you that. Yeah, I didn't have a lot of money. And for me, work was about getting economic security. I was very focused on money. And I'm not saying that's the right way. It was just my way. And I had done a lot of analysis, and the study you're referring to said, okay, there are companies that sell in any industry, the lowest 10 percentile, the upper decile of the valuations they get taken out at. And this study looked at the common features of the companies that got sold in the top decile. And it was all the things you talked about. And that's literally how I shaped the business model.
This is the single most important strategic lesson for any entrepreneur. Most people start with an idea they're passionate about and then try to figure out how to make it valuable. And he did the exact opposite. He started by asking, what does the market already value at a premium, and then built a business that checked every single box. He essentially found the answers to the test before he started studying. Recurring revenue, a defensible niche, a tech core, these aren't just features. They are signals to an acquirer that the business is low risk and high value. This is the difference between hoping for an exit and engineering one. He wasn't just building a company, he was building an asset designed for a specific outcome. But this level of calculation only works if you apply it to the right field. And his advice on how to find that field turns conventional wisdom on its head.
One of the things you said is, don't follow your passion. People who are already rich tell you to follow your passion. You should follow your talent. Can you unpack that? Can you explain what you mean?
I wanted to be an athlete. That was my passion. And then going to UCLA was a blessing because I figured out pretty quickly that I wasn't in the 0.1% you need to be in to make your living as an athlete. And there's some pretty basic axioms that should guide your career choices around where you invest your most precious capital, and that is your time, your human capital. The first is, the sexier the business, the lower return on investment. You want to be in fashion, the arts, movies, modeling, sports. Unless you get really, incandescent green lights from a very early age that you're going to be in the 0.1%, try and make a living somewhere else and then do that on the weekends. And that is, if you, the SAG-AFTRA, the most talented actors in the world, it's hard to get a SAG-AFTRA union card. You have to actually be in something. These are the most talented actors in the world, 182,000 of them. 87% of them don't qualify for health insurance because they don't make more than $23,000 in a given year. So the key is not finding your passion, but finding your talent, and then committing to developing mastery.
The phrase, follow your passion, is a trap, often set by people who are already wealthy to reduce their competition. Galloway is telling you to ignore the noise and look at the math. Sexy industries like film, sports, or fashion are flooded with talent, which drives down the returns for everyone except the absolute top 0.1%. True financial opportunity lies in becoming exceptional at a valuable skill in a less glamorous field. Be the best at installing energy-efficient HVAC systems, or become the go-to expert in tax law for a specific industry. Mastery is what generates wealth, prestige, and opportunity. The passion comes after you become great at something and see the rewards, not before. You need to follow your talent to a place where you can become indispensable. This principle of intense focus is the first variable in his entire wealth equation, and he has a particularly sharp take on how the modern side hustle culture completely undermines it.
Well, I want to talk about the first variable in this. You said focus. Because we talked about stoicism. I know about time. I know about diversification, but teach me about focus. I'm pretty bad at focus, trying to get better. Give me a couple words on focus as part of this equation.
If you have a side hustle, you need to find a different main hustle. You're better off with the time you spend on a side hustle, investing that incremental effort in your main hustle. And if you constantly find a side hustle is fine if you're investigating a new main hustle, but the way you get wealthy is not a variety of things. It's being really great at one thing. So that's the focus. And the term we use is mastery or ninja-like capability. But try and find something you could become great at. And that is, that's not easy. But also, again, we talked about this before, find it in an industry that's not very sexy. Because if you're in the top 10% of tax law or of installing HVAC or energy efficient HVAC, or you're in the top 10% of people who know how to install soapstone kitchen counters, you're going to make a really good living. And taking care of your kids is just so much fun. Being able to be there for your parents is just really exciting and really a lot of fun.
This is a direct assault on the idea that wealth is built through scattered small income streams. What he's saying is that if your primary career has so little upside that you need a side hustle to make ends meet or get ahead, you're in the wrong career. The incremental energy you spend on a side project is almost always better invested in becoming truly world-class at your main job. That's where the real leverage is. Significant wealth is created through disproportionate outcomes, and that only comes from deep, focused expertise in a single area. A side hustle is a signal that you're playing for incremental gains instead of exponential ones. It's a distraction from the real work of building career equity that can pay off 100-fold. Of course, achieving this level of mastery and focus comes at a cost, and Galloway is very clear that one of the biggest myths sold to young, ambitious people is the idea of balance.
So I'll ask them how much money they expect to be making by the time they're 35. And about 90% of them expect to be in the top 1%, which is $750,000 a year in America. And then they'll talk about that, like that's what I expect, but I'll say, what's most important to you in your life and moving forward? And a lot of the time they say balance. And I'm like, so you expect to be in the top 1% by the time you're 35, but you also believe you're going to have balance in your life? I mean, I've never seen that. You can have it all. You just can't have it all at once. And by the way, that may not be the way to go. You may sacrifice. You may say, I want to live a nice kind of balanced life. I'm going to move to a suburb of St. Louis, coach Little League, work 40 hours a week, be a good citizen, find a good partner, coach Little League, have a nice life. Nothing wrong with that. But the majority of the people I know, the young people, think they're going to be in the top 1% and also have balance in their life. And I just think it's ridiculous. I'm like, okay, the only way to get there, to achieve that, is if you have one thing, and that's rich parents. Otherwise, expect to go all in on your career or scale back your expectations around your economics and your influence, because it's a competitive market. And one of the things people can control is how hard they work.
This is the hard truth nobody wants to hear. You cannot have top 1% ambition with top 50% work ethic. The market is brutally competitive, and for a period of your life, you have to trade balance for leverage. You sacrifice weekends and free time in your 20s and 30s to build the skills, capital, and reputation that give you freedom and options in your 40s and beyond. He's not saying this is the only way to live, but he's saying it's the only way to achieve exceptional financial outcomes without generational wealth. It's a conscious trade-off. Choosing balance is a valid life choice, but you must accept the financial reality that comes with it. You can't have both at the same time. And to maximize the return on that intense period of hard work, you have to be in the right environment.
You absolutely want to get to a city. If you're ambitious, I'm not suggesting this is the right way. It's just my way. If you're ambitious and you want to have influence or economic security, before you collect dogs and kids, you got to get to a city. 2/3 of economic growth is going to happen in just 20 cities. And so if you're really ambitious, I mean, get to the biggest city in your nation, then get to London if you're in Europe, or New York in the US, or if you're in Texas, San Francisco, because those cities are really competitive. And you're going to be playing, you know how when you play tennis against players better than you, your game elevates? When you're in a big city, you're playing against the best players in the world. It's hard to live in Brooklyn. It's expensive, which means you got to be really good at what you do. And you're surrounded by people who are going to inspire you and who are really will elevate your game. And at some point, you'll probably have to move out of the city because it's difficult with kids. But while you're young, get to a big city. Try and find really high character, successful people to hang out with. Just find people you want to be like or that you admire professionally and personally, and try and establish those friendships and try and hang out with them, because you rise or fall to the level of your peer group.
Your environment acts as a multiplier on your effort. Galloway's point about cities is that opportunity is a function of density. When you're in a major economic hub, you're surrounded by talent, capital, and information flow. You absorb ambition and excellence by osmosis. Playing tennis against better players forces you to elevate your game. The same is true for your career. Being in a competitive city forces you to be better, sharper, and faster. It's about maximizing what I call serendipity surface area, the number of random high-value collisions you have with people and ideas. It's an intentional strategy to stack the odds of success in your favor. This all sounds like immense sacrifice and effort. So why do it? Because he argues one of the greatest lies we're told is that it's not worth it.
The thing we don't talk about is that your kids are going to have higher blood pressure if you're economically strained. Kids in low-income households have greater systolic resting blood pressure than kids in middle and upper-income homes. You're much more likely to get divorced. You're much more likely to have a stroke. You're much more likely to be the victim or the perpetrator of domestic violence when you don't have money. I mean, America becomes more like itself every day. And that is, it's a loving, generous place for people with money. It's a rapacious, violent place for people who don't have money. So all this bullshit that money doesn't buy you happiness, oh my God, is that a myth? I'm not saying you need to be incredibly wealthy, but middle-income people are happier than poor people, and wealthy people are happier than middle-income people. That's the bad news. The good news is that it tops out. You get diminishing returns. And you have to be cognizant of when you do get to some level of economic security, that's the means. The ends is such that you can have an exhale, release the anxiety that you feel, and then use the opportunity to really spend a lot of time with your loved ones and cement those relationships.
This is the permission you need to hear. The idea that money doesn't buy happiness is a platitude that ignores reality. What money really buys is the absence of anxiety. It buys options. It's the freedom to walk away from a bad job, to handle a medical emergency without going bankrupt, to give your kids a stable home, and to control your time. Financial stress is a corrosive force that destroys relationships, health, and peace of mind. Pursuing wealth isn't about greed. It's about building a fortress of security for you and your family. Understanding this provides the fuel to get through the hard years of work, because you know the end goal isn't a luxury car, it's a life with less fear. But the path is never a straight line. Failure is inevitable, which is why having a system for recovery is just as important as having a system for success.
I know a lot of people who are very successful and then they hit some failure, a personal failure, a death of a parent they can't quite get over, a divorce, a company that fails, and they get stuck. They can't forgive themselves. They can't forgive others. They can't forgive the market, or they lose their mojo. Whatever it is, and 2, 3, 5 years, 7 years goes on, and they just haven't progressed, and their skills start atrophying, their confidence starts atrophying. So what I say is put a statute of limitations. Whenever anything bad happens to you, you got to put a statute of limitations on it. A parent dies, within 12 weeks, you should still be sad and thinking about your parents, but you should be able to function. You go through a real emotional trauma or a breakup. Well, how serious was it? How much time? What's the statute of limitations? A business goes out of business, okay. Mourn for a little while. What is that? 2 months, 3 months? But if you aren't better. If you aren't back sending out emails, trying to raise money, going out trying to meet new people, whatever it might be within that timeline, you need to reach out for help and get unstuck, because time goes really fast and your skills atrophy in a sort of a downward spiral.
This is a profound mental model for resilience. Most people treat failure and grief as an open-ended emotional state. Galloway reframes it as a project with a deadline. By setting a statute of limitations on suffering, you give yourself permission to mourn, but you also create a clear endpoint where you are required to get back in the game. This isn't about suppressing emotion. It's about preventing it from derailing your entire life. Long-term success is not about avoiding failure. It's about the speed of your recovery. Letting a setback keep you on the sidelines for years is a surefire way to let your skills, your network, and your confidence decay. This is an operational framework for ensuring you stay in the game long enough to win. Ultimately, what Galloway provides isn't a collection of tips, but a complete system for wealth. It's a combination of cold calculation, intense focus, and psychological resilience. The real question he leaves us with is not about what to do, but whether we have the discipline to actually do it. What's one belief you hold about building wealth that this conversation has challenged? Let me know in the comments below, and don't forget to like and subscribe for more deep dives into the strategies that work.